Hey guys, can you hear me? Looking for that reversal down right now. Just playing around with prop a little bit. All right, got my little candle. Um, so today we're looking at that key level. So again, that level right here, that's pre-market rejection. That's how I took the little. So we hit that level several times, right? You got rejected. I want to see if he actually holds this eight or not once he comes back down. If he can hold the eight, it may try to break through it into the open. If he cannot hold the eight, we may come back down to VWAP and then retry again because VWAP probably just iron it looks like a zero point 0.5 area. So that's an area I'll be looking at to see if it will hit or not. So it just came back, hit. Show my exit. Um, Yeah, so right now on the 15 minutes, it looks like there's two reversal hammers there after hitting that key level. So if you look at the daily on my bottom left there, you'll see that this is an area that's been rejected several times, right? This is near the all-time highs. This is the zone that it will get rejected if it wants to go bearish, but it's looking like it wants to break out. So he had to break through like yesterday's highs and then last week's Thursday and Friday highs in order to get through that all-time high. So 75.75 is the target. There's a gap right there. I showed you yesterday. There's a gap right here from the previous day's highs in order to get to that 75.75 area. Right. So if we can get through today's high at 75, say 75.60, then 75.75 would be that target to fill the gap. And that would be your easiest play on the upside. Now, on the downside, it's coming down right now. So I'm looking for a reversion to POC. If that breaks, I'm going to VWAP. So if you can get down to that part, then it's not too bad. We can go for that play. Um, just going to look over here for a second. I might take that scalp if it does break. I'm just looking. 116, 115. Looks like it may want to come down to that 21. So just wait and see if it actually break that EMA or not. If it doesn't, it should reverse right there because it's POC's right here. So sometimes you just kind of almost get close to it and then flip back up, and then we get another retry at the highs there. But if it does penetrate through here, going to 21, probably going to almost touch the VWAP because that's the breakout area right there. So it'll come back to right here, and that would be a nice reversion trade. That's a mean reversion trade, and that would be zero point 0.5 right there. Looks like. All right, so it's coming down. It's touching POC and it's bouncing. So, all right, screw it. I just took a little mini trade here with a few micros just to see if it works out. It does look like it wants to come down that way, so it should be coming down. That's after testing the main level rejection and then coming down. So it's basically a reversion after a first fail. Usually happens. I was just playing with M and Q there. Um, so it usually happens that way, and then they'll come down, revert back to the mean, and then they'll continuation. Because if you look at 5 minute stochastics, we're oversold, overbought. I mean, so whenever I see the 5 minute stochastics, it works quite well. So whenever it's wavy or in a range, that 5 minute stochastic is your friend because once it crosses and then if it lines up to a key level rejection and a key level break, it almost worked out like 80% of the time. I use it so often now that like whenever I see it cross, I just don't even bother looking for the next trade. I'll be looking for the reversion trade whenever it does it that way. So that's what I've been looking for. And sometimes all it does is it's going to come down at like midway and then reverse back up. It was a strong trend. So that means he'll come down to VWAP. So I take that price action and look at which level it's coming to and look at how far stochastic is. So if it comes down to VWAP and whatever is that will stay above the 50%, which means it's still bullish, right? So that would be like a ideal location. I'll be looking for my targets usually. If I wasn't on live, I probably would have wrote that all the way down, but I can't watch it, so I just I just let it play out. Um, so the I'm not even logged into TWS. Just give me one sec. So that's to be the play for the bullish case. It'll come down right here. It'll burst back up. Um, okay. So we're looking at this level right here. So that would be around that gap fill area. So that would be 75, 75. Yes, I am recording this time. I forgot to record last time, and last time that was actually a pretty good lesson. Sorry about that. That's what happened. Sometimes when I'm like, I start the recording and then nobody's in there for like 20 minutes, I just turn it off and turn it back on, and I forgot to turn it back on last time. So, because otherwise, when I upload it, you'll just see silence for like 20 minutes. I don't edit them, I leave them raw, so I just upload them as soon as they're finished. I'm not like other people that like to edit. I like to keep it real. All right. So that would be the bull case. The bear case would be we're coming back down and it'll come back down to the pre-market low right here, dead cat, fail, and then we come down to that lower part, which is yesterday's support levels. And then if that level break, you're looking at all the way down to the low of the shelf, which is right there. So that would be the bear case, right? So far we're mostly looking for the bull case, because in the daily trend we're still above the 8, and everything looks like it's lined up for a breakout. That's why I'm more looking for the bull case to work out. But any type of news can take that down. So just remember that. There's war news, interest rate news, Fed news. There's just so much shit going on with the markets. It's I just play the trade the price action and then just have the scenarios in place. And then when those key levels break, I trade the scenario, right? So I try not to predict any directions. Well, that's why mostly why I don't try to swing other than precious metals for long term. But other than that, it's You just trade the price action based on off the levels in the GX and the volume, right? The things that works no matter what happens, right? So unfortunately, sometimes you do get those news events and then it takes out your stops, but as long as you have your stops in place, you should be fine, right? So right, so it's lining up for a bounce here. So let's see if it will bounce. I'm just going to set up a play here. Just a very small one. Let's see if we'll get going. So looking for that bounce, looking to see at least break that candle high or get to that candle high. So you want to go low, it sometimes gets to that candle high and reverses back down. You want to go higher, you'll break that candle high, retest the highs, breaks that high, it goes to a new high. So that's the step by step, right? So right now it looks like it bounced off the 21 at POC here. It needs to get above here to get bullish, right? So you're just waiting for that to go. Your stop can be down here if you're on prop. You're just basically waiting for that as your first target, and then see if you'll continue, and that will be your second target. Usually, I just go for the one candle scalp if I do it on NQ. So we can also go over here for a minute. So basically what I'm looking for is this whole cup to fill, right? This is a cupping handle. So this is the target that we're looking at right now at 75.60, which is on SPX would be this level right here. So once that level gets through, you can see right here, there's not a whole lot right here. And then there's this gap that needs to be filled. And that would be your target. And once that fills, this is the full cup. And then if that breaks out, this is, if you look at this, looks like 0.382 wave that it bounce off. So 0.3 choose they um well almost got to zero point 0.5. So 0.3 choose usually what happens is that gets you to the extended targets. Or it can be a double top. So but it's pretty close to zero point 0.5. So if it is, the extension would get you to that 7600 area, I think. Oh, 7660 would be the extension of that. So if this breakout to all-time highs, by the end of the week, we could hit that target. Not today, but by the end of the week. So so today we're basically looking to see if this will get broken through and fill this gap or not. So that's what I was looking at. So far we haven't broken above that red candle high. So right now it still can go either direction, but it's trying to break through it. It bounced off this level. It's just consolidating a little bit. So just give it a little time to see if it get through. But if it breaks that low, it's likely a ABC down, and then you'll probably take out WeWap, and then it could come all the way back down to here. So just be careful of that because we did not break through that as a confirmation, right? So that red candle high is the area you want to see a breakthrough to stay bullish. If it doesn't break through, it's actually fairly bearish. And on the Nasdaq, it's actually already at WeWap. So that's also where the breakout area as well. So like basically that's the bounce area that you're looking at. Right. So it's reclaiming that eight. It's trying to, and then you're basically looking to see if you'll reverse back up. Set the alert right here to break above. So this eight right here is also the 15-minute eight. But this kind of, if you look at a 15-minute time frame, it's somewhat looking like a little bit like kind of somewhat like a megaphone. So, but it's a higher low bounce off of here, so we're just looking for that breakout or range basically. So yesterday it made that higher low off that bounce, right? So the wave started down here, made a higher low after it retested this high and bounced up. So now we're looking for this breakout, retest, and then continuation to fill that gap and go for 7,600. That's the expected move here. And I don't think there's any news release until the Fed Warsh go on the testimony. That's pretty well the only thing that's going to happen. That's 30 minutes after market opens. So that's your time window. So the first 30 minutes, usually that there is a reversal there at 30-minute point. So that might be the reversal. If we go up first, it might reverse down. If it goes down first, it might reverse back up. So we'll see. Yesterday, he didn't do too big of a movement. Yesterday was still in range and he was talking as well. So unless he says something that's out of line or something unexpected, it shouldn't be too big of a move. I think, let me check the options there. I got to log in. I thought I did, but did the password wrong. So I would check what the expected move is on the options. See if they're elevated option pricing or not. Looking at the VIX, it's pretty low. It's at 16, so it's not that big of a deal. Um, if the VIX actually drops down today, we should break out today. So 5 minutes before the open, we're just hovering around that support area. So it might get a little bit whippy at the start, so it may actually hit VWAP and then come back up, or we're going to hit the top and come back down. So either or. It's hovering right around that POC area. So that's a POC area for today. So in majority pre-market trading, majority of the range was in this pocket right here. And then the upper POC, which is right there. So, and the low big support is down here. I can't. I missed the option pricing just as I log in because of the 5 minute window. But anyway, all right. So it's basically just creating like a little mini flag here, right? So just a mini flag leading to the open. So we're looking for the break after it opens. 145. So it looks like it's coming down to VWAP for that test. So the first 5 minutes is quite choppy. So let's see which direction it's going to go. All you're looking for is a higher low. That's all you're looking for, right? Into the open, a higher low. Okay, 1 minute to open. So far, it's holding that stack. So looking for the initial push to test that high and then see if it'll get through or rejection. If it gets through, ride it for that gap fill up top at 75, 75. That would be your target if it happens. So we're approaching that high into the open. So let's see if we'll go for it. There it goes. So let's see if we can hold that breakout. It's trying to hold. NQ is actually dropping as S&P is holding, so there's a divergence there. So just be careful; it may come back down because of that divergence. Check the flow. So it's started out positive. here we go. We're going to try to push. NQ is going in the other direction, so you want to be careful there. Tesla's going parabolic at the open, but the rest of it is not. So mostly SMH is coming down. So that's the semi. So yesterday SMH was up. Today SMH is down. So you can see the rotation every single day back and forth just to manipulate the markets to go higher. So that's the way they do it, just to keep people invested. So it's looking good. NQ's trying to hold. So if NQ holds, S&P might get that push to go to that gap area because we did broken out the pre-market range already. So the final destination would be that gap in area. So right now it's at 75, 77. Oh, so we did fill the gap already. Sorry. Yeah, we filled the gap already. 75, 77. So we filled the gap already. So we're at resistance. Sorry. But it gets through will be 7,600, I should say. All right. Again, that push. I'm gonna take a little bit off here. So your next target now, if it keeps going, is that 7,600 area. But I wouldn't try to push it just because that was the cupping high. So if it does get through, we'll go for the full extension. We're gonna go for 7,600 extension. But I don't think we'll get there just yet. I think he has to come back and fill that open gap now. So because we filled the upper gap, we're looking for the open gap to fill. So if he comes back, if he breaks that 8, we're going to look into that open gap as a direction, and that one gets filled at 75.45-ish. So there's a nice uh, range that you can trade off there if it does come down. Right now, he's still holding the 8, so it's still bullish. You're basically looking to see if he hits 7,600 first before the rejection, or he's going to reject here and then come down first. So far, he's holding, and flow is positive so far. And surprisingly, the megs are all lined up together today, except for Meta, but they all line up today. The only thing that's not lined up is SMH, which is down quite a bit. So that's the only thing that's holding the market down because the megs are actually pushing higher. So if you look at there, we're at that resistance. So once this push through is 7,600. There we go. I'm trimming up here. I'll leave a runner on, but I'm trimming. You know what? I'm going to say fuck it and take my profits right here. Because it's stalling a little bit. You're probably going to keep wanting to go. It's just that the NQ is going down. So I am not going to take that chance. I'm going to take my profit there. So here's the come back down. So it's coming down now. So we're looking to see. 1.5. That's 1.4. That's 1.5. Okay. So NQ is testing the pre-market lows right here, while the ES is still up there above the 8. So there is quite a bit of divergence today between the two. So NQ just hit support. So if NQ bounces, it may take ES up with it because ES is still holding that 8. So just going to keep watch. See if NQ actually going to hold or not because it is at that main support there on NQ. Maybe I'll show you up here. So this is NQ right here. So you can see NQ is hitting that shelf low, which is the pre-market low there. So that's your main support on NQ. If it doesn't hold this area, it's going to come flushing down and it's going to fill the gap on NQ. While ES is still holding the 8, but that's a pretty long tail there. So on the 15 minutes. So NQ is coming down. So stochastics is crossing again in the 5 minutes, so you want to be careful there. So we're at the 8. Let's see if we break and go to VWAP. Basically, it's around that gap area. NQ looks fairly weak here, so just so you guys know, it's making a lower low on the. It's slightly below the pre-market low right now, just slightly. So far it's holding the 8. Let's see what happens. You need a candle confirmation. I'm still thinking it's coming down to VWAP there, so because NQ is not looking good. So it's trying to come down there. Look for that reversion to VWAP and then possibly gap fill. NQ is trying to hold that shelf still. Because there's a quite a bit of difference between NQ and ES today. You're looking at ES as more of a ranging type of thing, but if you start confluence of NQ, it's going to get bearish. It's going to fill that gap. Um, if NQ reverses, it'll give ES more torque on the upside. So that's the way you guys look at it today, because there is quite a bit of divergence there. So we're getting that bounce so far. Same with NQ is making a 5 minute hammer to see if you'll just retest that 5 minute eight and get rejected or not. ES is still holding the 5 minute eight. So you want to see ES come back below 75.65, to 75.60, and then you'll go for the gap when it does that. NQ is coming down. Taking my profits here on NQ on the prop. So we're breaking down. So we are at VWAP. Take your profits. Watch if VWAP breaks or not. If VWAP breaks, we're going for the gap fill. Okay, here we go. So stochastics is still wide. So I'm thinking we can still break the VWAP and go for the gap fill. So I'm trimming here on half the gap fill. I'm gonna leave one runner on to see if you'll fill the whole way. But it's looking good for the gap fill. We're at the 5 minute eight on SPX. 21 is where the breakout area is, which is 75.55. 75.50 is your target. And you want to leave that 5 minute gap, that 5 point gap fill alone, probably, because 75.50 sometimes will take that bounce. That's why you want to just take it early. If you made profits, just take it, right? Because NQ almost filled NQ filled the gap already. So if NQ start bouncing, ES may not fill the gap, so you guys know, right? So as long as NQ keeps going down, it should be gap fill. NQ is still looking like it wants to go down further. It's a little bit extended from the 5 minute eight, and it is at gap fill POC. So there's that risk of the bounce. You know what? I'm going to take mine off right here, and I'm done with that. I'll just leave the rest for you guys if you want it. So I'm done. So I'm out. You guys can have the rest if you want it. It's still about 20 points to gap fill, right? And so you can go for it. What I want to see is a retest of WeWap and fail. That would be a better entry point for ES there. Yeah, if NQ was more confluence together with ES, I probably would continue to ride this thing down, but because NQ already fills the gap and it's at main support, it's a little bit harder for me to do that consciously. So because I always look at that risk side first before profit side. But if he makes it dead cat and then fails, then that's a confirmation it does want to go lower, right? So far, we have not got a dead cat yet on either side of the either NQ or ES. We haven't got a dead cat yet, and it's extended away from the eight, so it's prone for dead cat. That's why I choose to exit and then see if I miss a trade, I miss a trade, right? So yeah, so I'm guessing Walsh will be the reversal when he comes on. Also, that 30-minute mark tends to be the reversal of the initial trend, anyways. So there's that. Remember that timeline from the day trading course, right? So a lot of things happen after the first 30 minutes. It tends to be a reversal point. No sign of anything stopping on NQ just yet. So it may just push it all the way down. NQ may just get extended, and then ES may fill the gap. So we'll see. But like I said, it's a bit of a riskier trade because it's so extended down already without any type of a dead cat. So we get in the first green candle here. So this may be the dead cat retry of the VWAP area. So let's see if you'll reject VWAP. If it rejects VWAP, it'll go down and fill that gap. If it does not reject VWAP and reclaims it and reclaim the EMA, we're gonna retest that high or maybe even create a lower high just to form another range again. But right now it's just retesting VWAP, and so far in the micros I'm seeing a red candle, but I need to see it close, right? Whenever the gap's not filled, I'm thinking it'll fill later. So even if it dead cats, it's going to fill later on today. I'm guessing like yesterday, right? So if it fills on this on this wave down, then we can set our mind into the next trade, which is the bounce, right? If it doesn't fail and start bouncing, I aim a lot smaller size and go for smaller targets when it does that because like in the back of my head, it's going to want to fill that gap at some point, right? So, so you want an easier trade, you want to see it reject and actually fill the gap first. But NQ is looking like it's trying to create a base here at the POC. It's forming somewhat of a doji on the 5 minute. ES here is doing the same things, forming the hammer around VWAP. So just be careful of the reversal. So we just reclaim VWAP, reclaim 21, and is now trying to reclaim the 8. Now, if the green candle engulfs this red candle and then breaks above, we're going back higher and we're going to test that high once more. So you want to be careful if you're trying to short and go for that gap fill now. Yeah, you want to wait for confirmation, right? So wait till he actually breaks down and goes back below that low because right now it's reversing. So that's why I always take my profits early for that very specific reason. Because NQ wasn't cooperating. That was the main thing. NQ wasn't cooperating, so it wasn't in cinch together. But now you can see that we tested that high and got rejected, right? So far. But it'll just consolidate sideways because the 5 minute stochastics is looking like it wants to cross back over. If it does cross back over, we should get a wave and then maybe a lower high wave instead of high high. So we could come up to here and then fail, and then what we'll do will form this, and then you can come back down like that, right? Or if it goes up, we break that high, and then we'll go for 7,600, and then we somehow break back down by the end of the day. So we'll see. My guess is we want to probably fail right here for the low high, or we're gonna get a double top and come down. So because that gap is still open, like I said. So you see that we could not break through that red candle high, right? So if it comes down, you want to see it break below this candle low right here. Then we're going for the gap fill. Inside here, you can chop because in 3 minutes Welsh is coming on, so I'm guessing that's what it is. Yeah, so I'm looking at both. I'm looking at the SPX levels, but I'm also looking at the momentum of NQ because NQ is such a heavy weight now in the S&P itself because of SMH as well as the mags, which is majority. They make up for 40% of the index right now, right? So you have to take consideration of NQ. Normally, I don't when we're back into normal allocations of the index, but right now it's so heavy weighted that you have to take consideration of NQ. Right, that's the way I look at it. So that's why I tell you guys you have to learn how to adapt to market conditions, right? Because as market conditions change, a lot of our techniques have to change with it because there's certain things you have to take into consideration now. See you later, Richard. But what you're still looking at is those key levels, right? That's what still works. Key levels that has volume coming through, that still works, right? So even considering what's happening with NQ and ES divergence, I still look at what's the volume doing around those key areas, right? So if I show you the chart right now, so you can see the difference, right? So you can see that we have two green candles. So is NQ, except for NQ's at the gap fill support. Big POC right here, right? And if this bounces past this shelf high, that means we're going to retest the high in ES, right? Now, if this rejects that 5-minute 8 and start coming down, that means that NQ will get extended down and ES will fill the gap, right? That's why I'm comparing the two to see. I still look at the 8 right here as a rejection point for NQ. So I'm looking at ES. I'm looking at either the breakdown candle, which is right there, or the high. So it means a lower high or a double top rejection if NQ gets rejected right here. I much prefer lower high rejection because that would be an ABC pattern to fill the gap, right? So if he rejects right here and NQ rejects right here right now, we're gonna go fill the gap if he does. So we're at that area right now. So I'll keep this on here for comparison, right? So we're at the 8 on the NQ. We're at the lower high area. So let's say it gets pushed through. So if it gets pushed through, that means we want to test VWAP on NQ and we're going to test the highs on ES. I would prefer to see a lower high. That way I know for sure you'll go for the gap fill. If we get a double top, we may just stay in the upper range. So and this is the reason why I don't hold options all the way to targets. Once we hit some key levels and I see any warning signs, I just take them off for this very reason. Right. So we're at the area of rejection. So between this two area is the lower high area. So if he rejects, you're looking basically looking for a red candle or big tail, right? Looking for a green to red candle or a big long reversal candle. If it actually does break above there, it's a different story. If he breaks above there, it's going to go for 7,600 target if he does. So because that bounce there was at a SPX 5-minute 8. I'll take that off for a minute. So if you look at right here, so this is SPX, right? So that bounces right there. So that was a key area bounce. So that looks like 0.618 bounce. So that was a 0.618 bounce off the gap, right? So NQ just hit the 8 and got rejected. So far, didn't close the candle just yet, but there's a tail there. And the micro was rejected, but it reclaimed. So nothing burger. So next stop for NQ is basically the VWAP area, and the next stop for ES is basically the highs. Also, the flow was quite choppy, very mixed flow as well. This makes it very hard to trade. Normally, I would trade that bounce if it actually gap filled, but it didn't gap fill, so I refuse to do it. So you can see that puts are dropping, calls are rising, but as long as they don't cross, it should come back down. If it doesn't cross, like if puts start rising over here and calls start dropping again, the price will actually start coming back down. So I'm just trying to compare everything and look if there's any kind of confluence. So far, the NQ still cannot close above the 8, and ES it cannot close above the breakdown area so far in the 5 minutes. So NQ looks like it's rejecting. It's trying to. It's a double tail at the 5 minute 8. His first semi-annual monetary policy hearing since taking office. So testimony is starting. Is about how the Fed is serving the American people and how Chairman Bush is working to combat years of mission creep with the Fed and restoring the Fed's credibility, especially to the general public. The decisions that the Fed makes affect everyday life in South Carolina and around the country. For example, those decisions affect the mortgage payment a couple is trying to afford the credit card bill, single mom is trying to pay down, and the decisions a small business owner makes about whether they can afford a loan or not. Frankly, the Fed even has impact on the interest rate environment, as you know. So the options market's not pricing in a big move either. So all right, we're at VWAP on NQ. We're at the high. Let's see what happens here. Let's see if we can overtake or it's going to get rejected. Facts, however, because that is really important for the long-term durability of our economy. But in North Charleston, where I grew up, families do not talk about monetary policy, Kevin. They just don't talk in those terms. But they fully understand the principle that when prices rise faster than paychecks, it's really hard. That's why affordability must be at the center of our conversation. The Federal Reserve has a mandate to pursue and promote a strong labor market through maximum employment and stable prices. Those are serious responsibilities. I'm glad that you would have the job and taken it. So in order to for this to turn bearish, it has to break below the 8, but right now it's looking like it's expanding, so we may get the breakout instead. But we'll have to wait and see. It is not a slogan. It is a responsibility. And the best way for the Fed to protect its independence is to stay focused on its mission.
For too many years, the Federal Reserve drifted into issues outside of its core responsibilities, and America paid a price for it. Mission Creep makes the Fed less accountable and undermines public trust. I am encouraged by the steps that you were taking to reform our central bank. That starts with a more disciplined approach to how the Fed communicates, moving away from overly detailed predictions about where interest rates might be going in the next several months is a helpful step to make sure the Fed is able to adapt when conditions change. Families, small businesses, and markets are better served when the Fed follows the data in front of them, not a forecast that may change in an instant. Less guessing and more discipline will help the Fed stay flexible, credible, and focused. The 5 independent task forces that you set up also sends a very important signal that the Fed is willing to start from its core principles and pursue thoughtful reforms to deliver on its statutory mandate. You and I have.
So we're getting rejection of VWAP there on NQ, and it looks like it's trying to reject the highs there for ES. Nothing's confirmed yet, just so you know. Just early signs. I need to see the candle on ES to turn red and go below that 8. And on NQ, I need to also see that candle below the green candle low to confirm.
You need to have a serious debate about what direction to go and, frankly, how to get there. So I'm really excited about what you're doing there. I look forward to hearing how that works out for you, for the Federal Reserve, more important for the American people, because unwinding the balance sheet size that we have today is going to take a deliberate effort that will have to be paced properly, not to create instability and volatility in our market. So thank you for taking on it seriously. As AI reshapes the economy, the Fed should understand its impact on jobs, productivity, and prices, and the financial system without using technological change to expand its mandate. That same discipline should guide the Fed's approach to bank regulation. The U.S. banking system is sound and resilient, but we cannot take that for granted. Preserving that strength requires regulation and supervision that are clear, appropriately tailored, and focused on real risks.
So we're getting that red candle now. Let's see if we can close below that green candle low.
Necessarily restricting lending. When capital is stuck on the sidelines, family in Irmo, South Carolina may find it very difficult to get a mortgage. A small business may find it hard to get a loan. The community bank may spend more time satisfying Washington than serving its customers. That is why this committee will continue pressing for regulations that protect the system without cutting off access to credit. I want the Fed to be very successful. We need the Fed to be successful. Citizens become more stable, your job is up well, markets gain confidence, wages grow, and more families have the opportunity to save, invest, buy a home, and live their version of the American dream. Welcome today. Ranking Member, floor is yours.
Thank you, Mr. Chairman, and welcome back, Mr. Warsh. So about 2 months ago, you appeared in front of this committee for your nomination hearing, and you refused to answer basic factual questions. I assume because you were afraid of contradicting President Trump. Your answers during the hearing were so troubling that this committee had a party line vote for Fed chair for the first time ever in our history. You were confirmed by the Senate in the tightest vote for a Fed chair in U.S. history. So you now face an uphill battle to show that you have the independence needed to run America's central bank and to serve American families and not just President Trump and his billionaire friends. Now, President Trump's corruption and failed economic agenda is raising costs across the board. Inflation has kept real wages from growing for the 3rd consecutive month. That means in the Trump economy, families are falling behind with less to spend every day that goes by. High interest rates are making mortgages, auto loans, and credit cards more expensive. More and more people are falling behind on their bills. 95% of Americans believe that the U.S. is suffering an affordability crisis, while President Trump continues to call affordability a hoax, telling Americans their concerns about the cost of living are made up. Lower interest rates would provide some relief to families, but the Fed hasn't lowered interest rates and may be forced to raise rates even more, all because of one man, President Trump. Now, the president knows this. So instead of changing course, he wants to take over the Fed.
So again, that red candle, NQ is more weaker than ES, obviously.
Last Fed meeting, who declined to submit economic projections. Projections that are supposed to show how Fed's decisions under her leadership are likely to affect American consumers and American workers. People might look at that and conclude that, tell the truth about inflation under Trump.
So NQ is where we're weak looking. It's retesting that shelf low. So let's see if it'll hold that low or not. Yeah, SMH is making lower lows. That's why. Yeah, that's what's taking the NQ down.
And the Fed offers many appealing opportunities for the president to enrich himself who fleeces the American people. Start with crypto. Trump's family crypto company is World Liberty Financial, centerpiece of the crypto enterprise, let him create in $1.4 billion in 2025 alone. Now it is currently a bank charter. After that charter is granted by Trump's own bank regulator, World Liberty could seek special privileges from the Federal Reserve to juice its own profit.
So ES is holding quite well. Let's look at the heat map. So it looks like the heat map, it's still, it's 50-50. No confluence. But it is quite greener than yesterday, and the megs are all kind of aligned in one direction. That's what's holding that, pushing the market higher on ES, because it's going up with the other sectors with the megs, except for SMH sector. So I would start pay attention to SMH to see direction of SMH. If it's confluence with the direction of ES, it's a good push. I would go for that direction. If it's going against the ES, then even if the ES is pushing higher, but SMH is going lower, I would aim for a smaller target, and I would size it small because you can reverse it. But if you're trading NQ and NQ is going in the direction of the SMH, then you're fine.
My superb colleagues from across the Federal Reserve System. In submitting the monetary policy report, I can't help but think of a long line of central bank chiefs who came.
We're at the highs there on ES there. Let's see if we can push through it. If you push through it, then you may go for that 6,500. But I don't know if you can push through or not. But it looks like it wants to, because it is a cup and handle pattern right now on ES.
some forms of communication, including some that the ranking member.
I'm not touching it though. If it does go higher, I probably won't touch it just because it's not confluence with NQ. I'm just going to wait and see until we get that breakdown because at some point I'm thinking we'll fill that gap. So I want to skip it.
These obligations are of a piece with the Fed's rightful independence.
You guys can trade it though.
Pinch point in history.
So where ES, the EMAs, you can see start going wider. You can just follow the trend until it's broken through. It's just I'm trading options. I can't do it without confluence.
The inflation surge of the last 5 years will be a thing of the past. Just a month ago, I chaired my very first FOMC meeting. My colleagues and I recognize that high inflation has been an undue burden on American households and businesses. And while monthly fluctuations are inevitable, especially in an unsettled world, underlying inflation over longer-term horizons is determined largely by monetary policy. As I've said before and will say today, inflation is a choice. The members of our committee have no tolerance for persistently elevated inflation, and we share a resolute commitment to restore price stability. That was our focus when we met a month ago, at which we decided to hold the target range in the federal funds rate at 3.5 to 3.75%.
NQ breaking down.
Our work at the Fed demands a proper reading of economic conditions. As you might have seen,
ES looks like he wants to break down too.
Is expanding at pace, showing resilience in the face of recent developments. Household consumption growth is moderate, and manufacturing output has moved up steadily this year.
Speed testing that 8 one more time. Yes, stochastics is looking like he wants to close to cross to go lower. So
compare that to what we've seen in financial engineering. This is a better situation. The rapid pace of CapEx, which appears to be accelerating, reflects in large part the construction of infrastructure, including in and around AI and the immense demand for AI-related equipment and software. Investment in equipment overall increased about 8% for the year in the first quarter. Within that category, high-tech spending locked in
challenging that 8.
of about 25%.
If it breaks, we're going to weave up and then possibly going to go test that gap one more time. All right, I'm entering a short here. Just small till he confirms.
So the economy includes new challenges for policymakers. We at the Fed are monitoring the implications for the inflation and for the labor market. That brings me to the supply side of the economy, a subject worthy of
More like a lotto leg right here.
Productivity growth has been strong.
Just one leg.
And I'll note that this
I need to see it confirmed by breaking below that, close below that 8. And also breaking down below 21 would be even better. But all I need is it close engulf that green candle low, and I'm good to add. So I'll add gradually instead.
by the welcome I've received, by the encouragement of my colleagues. We have a duty to point the institution forward, to take a fresh look at current practices, to make sure we're serving our objectives, and we're going about it systematically. As the chairman referenced, I appointed a task force in each of 5 areas that are central to the conduct of monetary policy. I'll just reference them and close. First, Fed communications. Second, our balance sheet policy. Third, our use of existing data.
New low on NQ.
Productivity of jobs, and finally, Fed's inflation framework.
SMH is dumping hard. If you guys want to short SMH, you can do that too. There we go. Got what I wanted. Still riding a little bit. Taking majority off. Riding, couple legs. One leg left. I'm gonna take that leg out. We wop here. That, my friend. So it's done. Well, now you're looking for that break into the gap and filling the gap as the next play. So it's just that it's so close to that gap. I just don't want to take the chance of a dead cat bounce on the gap. That's why I'm taking it all off with options, but it does look like it's going to go for the gap. I'm looking for a dead cat. If I could get a dead cat, retest that 8 and then go down, that would be even better because I want to see a lower high.
Out to 15 people who I have known and trusted with a diversity of.
Try to trade both my account and the prop. This is why I don't want prop because it distracts me. He hit my target with 3M and Q. That's why I'm trading with just 3M and Q. So he hit my target. So the profits are quite small on it. And I'm only trading at 2 accounts at a time, so it's whatever.
Data going in the right direction. My view is these are all imperfect measures of the state of underlying inflation. So one of the task force is going to see whether we can do better, have better data from external sources, and even better ideas as to how important organizations like the Bureau of Labor Statistics, the Bureau of Economic Affairs, might think about how they could do a better job in an evolving economy.
Thank you. We met a few weeks ago with Dr. Taylor, who's slated to be the head of the president's economic advisor. We talked a lot about artificial intelligence, the impact it will have on our economy.
So we're at the gap right now. You can see that there's signs of support at the gap. Just a little bit. So all I want to see is a bear flag and then break the low to fill the gap. It's likely to fill the gap this time around, so we'll see. But you want to see confirmation. You don't want to just go for it, okay? See if it will retry, rewop, and reject and break this low.
That is getting to the future that we're talking about, and frankly, beating China with this AI race might come down to something as important as electricity bills and water usage, which could prevent us from having a serious conversation about productivity gains. Thoughts?
I can't think, Mr. Chairman, of a more consequential change to the U.S. and global economy in my adult lifetime than the surge of investment and the potential in around AI. That's part of the reason why one of my task forces is to focus on what's the effect of this general purpose technology on both parts of the Fed's mandate, on ensuring stable prices, but also on full employment. You gave us both.
Oh, he's trying to retest VWAP here.
It is a huge opportunity, but it's not without challenges.
NQ is extended away from the 8, so I need to see a reversion and a rejection.
Should be good U.S. companies and U.S. workers than any other country in the world. Any other country would exchange positions with us in a moment. Second thing is, I do want to make it clear that in the near term, I think this investment is probably quite good for jobs as we're building out the infrastructure. And over the long term, my best guess is that this will improve American productivity and will improve the real wages and it will help support employment. But between the short term and the long term, it can have a disruptive effect And we're attuned to that. And it's part of the reason why I wanted to shed some new light on with some outsiders.
My time is up, but I will submit one question for the record around the issue of indexing our regulatory thresholds. We've seen so much growth in the last since 2019 that our institutions might need to see a little calibration or recalibration on thresholds that we have.
So retest the 8. Looking to see if he'll reclaim or he's going to reject here. I want to see a rejection in order to play the short side to the gap fill. If he doesn't reject, we just go into range again. So
But in a pretty pyramid broken culture, I'm concerned that you seem to be embracing. At the time of your nomination, you owned more than $100 million worth of shares in private investment vehicles called the Juggernaut Funds and THSDFS LLC. And you refused to disclose the underlying assets to Senate and to the public. You say now that you sold those shares.
and the guy's worth $100 million, and he's going to be fed. Of course, he's going to try and make some money off of it.
This is a discussion you and I had in the public square 7 weeks ago, and I'm thrilled to tell you that I fully honored the obligations I had under the agreement I had with the Office of Government Ethics.
Yeah,
And there is continued disclosure, which I'm happy to make consistent with the agreement.
Specific question. Who gave you $100 million right before you were sworn in? Was it a billionaire who has business with the Fed? Was it Stanley Druckenmiller, who's made billions of dollars betting on what the Fed does? Or was it a different billionaire? Who gave you the money?
I will fully comply with the Office of Government Ethics. And well, it is an answer, actually, Senator, because there are obligations, and I will satisfy the
Dollars that you got just before you were sworn in. And you won't tell the American people where it came from. Let's go to another incident. As you know, the Fed imposes a blackout period where senior Fed officials are prohibited from talking about economic issues with
Showing signs of resistance here.
enforce the monetary policy process. In other words, no one gets some special insider information from the Fed. But shortly after your first FOMC meeting's chair, right in the middle of the blackout period, the Fed's vice chair for supervision, Michelle Bowman, was reportedly the featured guest at a secret dinner hosted by Bank of America for its hedge fund and Wall Street clients. At this closed-door dinner, she reportedly spoke about both monetary policy topics and regulatory policy. Now, I've called on the Inspector General to review her conduct, but you're the guy in charge. As chair, you set the tone on culture. Did Vice Chair Bowman provide any non-public information to the attendees at that secret dinner or discuss any regulatory?
And that rejection. Now, as soon as he closes back below VWAP, it should make a continuation.
Sent a letter to 21,000 people of the Fed outlining our culture.
I appreciate that, but we have very limited time and a very strict chairman. So can you just answer the question about the vice chair and her secret meeting?
Sure, I'm happy to the extent I can share it with you. The vice chair has been an excellent colleague in my first 7 weeks. I'm aware of the letter you sent to the Inspector General. Out of an enormous respect for him, his investigation, what he chooses to do with it, I'm going to leave to him to do without trying to micromanage that.
So you
I'd be interested in the judgments that he comes to.
So you will support his investigation. You made your own investigation. Did you ask her if she spoke at a secret meeting during blackout period?
I agree with the suggestion. The Inspector General is an independent actor, and I'd be very interested in his discussion.
You just said you're the guy in charge. Did you ask her about the secret meeting that took place?
A little scope there.
Ask her?
So a simple question, which is, I wasn't
Still holding VWAP.
I don't know.
It's just range right there.
I need
Chair and not ask her own vice chair whether or not she violated the blackout period, violated the law.
it would be inappropriate for me to prejudge facts that are being discovered by an independent
Judge them if you don't ask.
Well, I don't know how to prejudge them if I wasn't in the attendance of a meeting.
Did you ask?
She's been an excellent colleague.
Did you ask?
I've asked her a lot of things
Did you
about supervision and regulation.
Yeah.
We've been busy doing a lot of field work.
Say, I'm taking the same time you did. I just gotta say,
You hope so.
the tone that you are setting is one that seems to invite corruption.
We've had 7 weeks, Senator Warren. We've set a tone of performance, accountability, responsibility, and integrity.
Thank you, Mr. Chairman.
And these testimonies are kind of funny. So NQ staying weak. NQ is stack at the EMA 821 on the daily and the 50. So he's stopping at the 50 right now. If that breaks, he can come down pretty strong there. Maybe to yesterday's lows. But ES there is still strong. It's stacked, still stacked to the bull side. But NQ is stacked to the bear side. So there's divergence there. It's kind of hard to trade when there's divergence like that as well. The flow is back and forth, back and forth. So puts were rising, calls were dropping, but now calls are rising a little bit and puts are flat. So
Yes, exactly right. I thought that was the prudent thing to do, given the.
So NQ looks like a bear flag to me. ES, it's at that breakdown area, failed 3 times so far. What you need to see is to break below VWAP and below that big green candle. Then it's going to fill a gap. NQ looks like it's going to come down. Or he wants to come down. But if you look at the mags, Amazon's going strong, Google going strong, Apple going strong, Microsoft going strong, Meta going strong. The only thing down right now is Tesla, Broadcom, and Nvidia. So 2 of them are in the SMH group. So SMH is still making new lows.
The accusation of some members of this committee have been that you were trying to influence it. Yes. Can you talk a little bit about the logic? Am I on the track with regard to the reasoning?
We're below VWAP now. Here we go. I'm going to take some profits off here.
Show up with a lot of ideas to reform monetary policy and supervision, regulation, and payments. Only been there a short while, for 7 weeks.
See, those kilos are important, right? That 75 rejection was. So now we're back in the support area, which is why I'm taking, because this is the range support, just so you know, right? So I'm just taking my profits here. I'll wait till he actually confirms that we're going to go for the gap fill before I actually go play the gap fill. NQ is continuing going lower, but I'm done with the prop.
So let me just, in a minute, 14 seconds that I've got left on mine, we talk a little bit about Basel III in particular. And I think you and Vice Chairman Ronda and respective financial regulators, I think you've done a good job in terms of your rules regarding Basel III pre-proposal that was issued this March. The 2023 proposal would have substantially increased common equity capital requirements for Category 1 and Category 2 banks by approximately 19%.
Again, it's holding that low range, which is the low of the shelf. So you can see that right here. I drew earlier. So that's the area that needs to break through, right? So far, it's just between the upper part of the shelf to the lower part of the shelf, and that was the range that I was creating. Once it breaks through here, it goes for the gap. If you look at SPX there, it's the 21 EMA on SPX. So right here, that's the part you want to see it break down. I'm gonna alert right there. And see stochastics is crossing lower.
Debate about what Basel should be. Boy, we should get to the bottom of that 20 years later. And we should end up with a set of reforms in the United States that makes our financial system, our banks, safer, sounder, and more competitive. It is that competition which provides better and more agile credit to the real economy. The Basel Endgame Center is not a endgame. I am happy.
So we're trying to cross down there.
Mentioned around public comment. I'll be very interested in the comments before we go final with the post final.
But let me just say, this is already off to a good start. Say around 5 minutes. Period. Thank you. Henry, close yours.
Thank you, Mr. Chairman. Chairman Walsh, I want to see if I can put a cap on this discussion. When will you disclose who bought your assets? When?
I believe there's periodic requirements under the ethics laws, and I'll fully comply with them. I think the next reporting requirement is at some point next quarter or so.
And you will fully disclose your assets?
Fully comply with the law and the ethics code.
Thank you. AI is making huge impact on everything we do, particularly the banking system. And as you're aware, an interagency.
Still holding that support.
The major banks, the 8 major banks who use mythos.
So I'm mostly just playing the bear side. So in order to play the range on the bear side, I play the rejection at the upper range. Or I wait till it breaks down and then I go for the gap fill. So those are the 2 plays I'm doing.
I think the broad financial system has new vulnerabilities with these new technologies. I wouldn't want to just isolate.
Puts are rising, calls are dropping. So it's in confluence now with the flow. Finally.
But as
so I mentioned earlier, right there, if it goes a separate direction, it'll come down. So it's going the separate directions now. So we can see the puts are rising sharply, calls are dropping sharply. That's confluence to go lower. So gap fill is in play.
share the sentiments Senator Reid. You're not the deciders as to who has access, but I have not been shy in sharing my views with authorities across the government about the vulnerabilities and have been asking for access, not just for the Federal Reserve, but for other institutions, to a whole range of these new artificial intelligence models so that they can protect themselves. If you said to me, what will reach you over the course of the next several months, I want to make sure that we're as protected as we can be from foreign actors that want to do us harm.
Well, let me change, stay with AI, change the book. Recently, Governor Waller in New York Treasury warned that AI investments may be increasing inflation, and many economists have similar thoughts. So are AI investments aren't driving inflation?
This is one of the good family fights. Let me give my own view on it, which might be somewhat nuanced from the way you just described it, and some of my colleagues. The shock of AI, the supply shock of AI, has an effect on demand and supply. We see the effect on demand much more quickly. We see it in the capital investment I referenced. We see it in the prices of chips that are going up. We're
Within Q,
guessing.
yes, but wait till is not so extended away from the 5-minute 8, and just play the confluence together. Because NQ can possibly go for yesterday's lows.
Reduce the supply side of the economy.
Yes, still not gap fill. It's taking its time, but it is a lower low there on the ES. So I'm looking for that reversion and then the breakdown afterwards.
Like you, we think a lot about real take-home pay. The part that the Fed can do a lot about is the real part. If inflation were lower, real take-home pay would be higher. That's just the arithmetic. The other question is a broader one, which is what are we going to see the productivity improvements lead to a surge in wages? Wages have moved up at a reasonable pace, but it's likely that as productivity moves up more, we should see wages getting that timing right, understanding when that happens. That's a puzzle, and it's a puzzle we're going to continue to work on.
In the last 10 seconds, will AI eliminate jobs that are catastrophic?
So you're asking me to prejudge the task force. My short answer is over the long term, absolutely not. I believe that this is a long-term job creator, but will it be disruptive? And will some people have their jobs at jeopardy because of the new technologies? On that, I can't offer any sort of guarantee or comfort.
Thank you, Mr. Chairman. Chair, thank you so much for being here with us today. Certainly appreciate the opportunity to have a conversation, and obviously so early in your tenure in this new role. In this year's monetary policy report, one of the most encouraging things is the increase in business investment that we're seeing across the country. In Alabama and many places, we're seeing companies expand, manufacturers grow, and communities are benefiting from that investment. I believe that these are good signs and that they're also important for the future because they help us determine whether America remains the most competitive economy in the world. My question for you is, as you—
I think when he gap fills, it's going to be fast wick down and then reverse back up. So just careful of that. Make sure your hands are on the hotkeys. You want to take that trade. I think I'm going to skip that trade since I caught most of the down move already. And right here it's getting a little choppy for my liking around that area because NQ is forming double hammers on the 5. So is ES, and the stochastics is almost oversold. So I'm just going to wait.
12 months. I sound dismissive of it. The surge in prices is real. I'd sure rather the most successful companies in the world investing in property, plant, and equipment than doing a share buyback. So I'm encouraged by it. The trend is our friend here, and this business capital investment is contributing massively to the GDP we've seen in the last 12 months. My colleagues know I'm not big for forward guidance, but I would guess that that trend continues. What gives me optimism about it? Well, when the private sector deploys this amount of capital, they must see something shiny at the other end of that rainbow. They must see a very good return on investment. That's why they're taking this capital and they're putting it to work. I tend to think that private investment has a multiplier way higher.
No, I just heard him say that. Maybe that's the warning sign, eh? It's a sign.
making staffing and compliance and long-term business decisions based on thresholds that have been updated since 2019. At the same time,
NQ looks like he wants to revert back to the 8.
learning works when it comes to what banks can expect to see and proposals in the future.
So it's a great question, one I take seriously. To be candid with you and the chairman and other members of the committee, monetary policy has distracted me a bit for 7 weeks. But the Federal Reserve Chairman is supposed to be the chairman of monetary policy and payments and consumer affairs and supervision regulation. But I can tell you this, Vice Chairman Bowman has been working on these initiatives. She has briefed me about them. And broadly, I'll step back and say modernizing our banking system, streamlining regulations so that the rules that apply to the systemically important financial institutions are not one size fits all for every other. The secret to the American economy is we have a few thousand.
The double hammers on both NQ and ES. I'm looking for EMA reversion and then a possible rejection.
Government. I think reform is coming to supervision and regulation. I have my own ideas that might be as dramatic as I've already shared on monetary policy here. And I think the sooner we can get to the bottom of it, the better. If I could say one more thing, the reforms we've been putting in place over the last 15 years coming out of Dodd-Frank, as we learned in the Silicon Valley Bank example, the First Republic example, it worked perfectly. My predecessors had very little choice but then to do another overall bailout. We don't want that to happen again. So we want to tailor the rules and the capital so they serve the best interests of the U.S. economy.
So ES is back to WeWa.
And competitive.
And NQ is close to that 5-minute 8. So we look here to see if it's going to reject or it's going to reclaim. I'm thinking rejection.
In the last remaining seconds, I just want to say thank you for your commitment in the first 7 weeks, almost 2 months. You said it earlier, but to performance, to accountability, to responsibility, and to integrity. Appreciate what you're doing and look forward to continuing to work with you.
Thank you, Senator. Senator Warner.
Thank you, Mr. Chairman. Chairman Walsh, it's good to see you again. 7 weeks in, you got a hell of a job. Inflation's still too high. How you predict the president's chaotic foreign policy with wars in the Middle East? I'm going to come to an AI question, but let me be clear.
There's a rejection there.
Hold you and appreciative of your comments about inflation, about the Fed's independence. But I think there are many, many common areas we can work together. I want to hit, one of the things that in our first meeting was your recognition that probably the biggest issue you're going to face is AI. My 2 cents is I think it is going to have long term. I agree with you. It's going to be job creation. Very short term, I think you may see some upsurge in terms of energy production and data center build out. Years 2 through 5, 2 through 6, I think there could be massive economic disruption. You're going to get towards new college grads. You can policymaker a job, but if this is going to have the potential effect, I hope I'm wrong, but I'd take a bet with you that 3 years out, you can see 30% we see college grad unemployment. If we see that, what do you see at the federal in terms of urging your actions, but also helping us sort that out?
Senator Purcell, I appreciate it. I promised to.
Don't say nice things about me. He's just got me on a clock. Answer my question.
All right, good. Well, let me just say.
I do indeed.
Let me just say this. I appreciate that you haven't given up on me. I haven't given up on you. I haven't given up on your colleagues. I'm the independent head of a central bank. No matter how people voted, I'm going to be serving all of you.
This doesn't count against my time.
AI. Let me get to the core of your question. I am more confident that there will be a surge in output because the U.S. is at the cutting edge of AI than any certainty about the effect on the labor market in the next few years. The United States will be a winner. That is my informed judgment. But this is a time filled with both challenges and risks. We take both parts of our dual mandate seriously. Do I believe that the productivity improvements over time will be structurally disinflationary? I do. I believe everything technology touches ultimately gets cheaper. Your background, I think, would be.
So we're retesting that low, but it's stochastics is almost oversold there.
I would comment you on college graduates.
If it breaks that low, we could go for the gap fill really quickly before that crosses. And then it's going to bounce back up after it fills. So let's see if that works out. Like I said, I'm going to skip that trade. Too risky there because there's not enough points, and its NQ is kind of holding that area. So we'll see.
These are fair questions. I don't have easy answers, but I do have a task force.
We have to work together because if we hit this bump, and I think it's going to come, we gotta collaborate. Now, so Reed asked a very good question about Mythos, and I 100% agree. Mythos is already yesterday's news, right? Because these models are coming out so quickly and they pose such security risks. I think it's incumbent because of the risk it provides to our financial system that at some point you're going to be, and I'm asking you now, I think personally, I believe you need some level of mandatory testing pre-release because of the potentially draconian and dramatic effects. How long, who's on that panel is critical. But what do you think about pre-testing release regime going forward? Just the voluntary willingness of a company to come forward.
Yeah, so two things first.
So again, it's holding that low.
Technology, we would say hyper.
Stochastics is getting into that over sold area, so you just want to be careful. I mean, it can fail before the reversal, or you can just bounce here. So to me, it's not a good risk reward, but you can still go for a scalp if you want to take on the risk. But
sooner they can mitigate their vulnerabilities, the better. I'm looking forward to.
Well, I hope that you will be willing to advocate moving on beyond the voluntary regime because the downside risk. 12 seconds. It will quickly address the role of all of the Federal Reserve banks and your vision of what the role they should be.
So very quickly, I'll just say this. We should be good stewards of taxpayer money. We should be consolidating functions where we can. But my mental model, Senator, as I mentioned to you yesterday, is we should have 12 centers of excellence. I've got more than 12 problems on my plate. And if each reserve bank were to develop an expertise on something that matters to our remit and the American economy, I'd encourage them to develop that advantage.
Senator Rickles.
Thank you, Mr. Chairman.
so this is like that breakout area. It's holding on the SPX. So what I'm talking about is that high. So you can see this high has been tested multiple times. That's why it's holding there quite well. Right? Because this is the 75.50 I talked about earlier, that it may not fail because it's 75.50. So that's what it's doing right here. It's just holding that 75.50. Doesn't mean it won't fail. It just means that there's a chance that it won't fail, right? Plus, stochastics is almost crossover in the 5 minute, which to me is not worth the risk until that gets into the overbought territory and that gets another rejection or some sort, or at least a break below that 75.50, and then you'll go for. It's not even worth it because it's 5 points to fill the gap. So that's why I say 75.50 was the area that you should be just taking profits on earlier. So.
One of the most important places to start is with the Fed's balance sheet, an issue I've consistently raised with other Fed governors. The Fed expanded.
I'm pretty well done trading around this area. So the only thing I'm looking for right now is it going to reclaim the EMA? Because if it reclaims the EMA, we're going to go into a range trade on SPX. If it does not reclaim the EMA, just revert back to EMA and then come back down, then we're going to fill the gap. And then we're going to jump back up, back to the mean. So it's likely today it'll close within the mean area because 75.50 on the GX is basically the main level today. So you look at the GX right here, 75.50 is where both sides got a lot of open interest. That means if it's below it, it'll revert towards it. If it's above it, it'll revert back towards it. So That's what I'm thinking. If we get extended away from 75.50, we'll revert back to it if we don't fill the gap first. If we fill the gap first, it'll still try to revert back to that same area, right? So down here, it's really not worth that 5 points to go for the gap fill to me. With there's just too many variations today because it's not confluence with NQ, right? Two were or oversold now temporary, and also 7550 was a big level. So
Our entry principle is that we get out of that business. The central bank has not, for a whole range of reasons, gotten out of that business. My general view is
this is almost lunchtime for me. So
only one other point. Monetary policy needs to be architected, needs to be designed by the policymakers around the FOMC. The plumbing, the operations, how we do that is conducted by the New York Fed. I want the architecture to drive the plumbing, not the plumbing to drive the architecture. We're going to make a monetary policy decision with respect to the balance sheet. I'm very open-minded to changes, and any changes we make will be well discussed, well shared. And
so you see, he's creating somewhat of a base
financial markets
right here, somewhat of a base. All right.
We'll have plenty of time to adjust if we make changes.
Also on NQ, there's also a base there.
What is the smallest balance sheet that the Fed could operate?
So on NQ right here is 0.618 of the big wave. That's yesterday's range I'm talking about. So that's 0.618 area.
And the balance sheet can expand when there's a crisis. The balance sheet can also expand if an institution.
So again, we reverted back to the 8 now. We're showing signs of rejection there. So he's going to go for one more try. Maybe we finally get a fill. But who knows? I say I probably wouldn't trade that. It's not enough room for the downside to worth the risk of a reversal at this area. So, but your trade can be if it does fill the gap, you can trade the bounce off the gap fill. That would be the trade.
Question I'll follow up with record on scams, because this is something that the banking industry is telling me they're increasingly seeing, and it's causing people who
this will be the only reason why I think you'll still fill is because this gap is quite wide, right? And we're in negative flow now, so we can still fill. And once it fill, I might able to see the put start dropping and call start rising, which will give us the reversion back to the mean. So it's still in play, it's just that there's not enough room for you to profit off. I mean, is that it's 10 points from here, and it's too risky to short here because we're still within the range. So by the time it gets to the low point, you got 5 points of profit, which is not worth anything. So that's what you have to take consideration. You have to do the calculated risk, right? So you're risking 5 points for revert for a potential sharp reversal off that gap fill, which to me is just not worth it. I mean, it can fill and keep going down because there is a possibility that you can do that. But again, like below there is 75.30. The gap fill 75.45. So 75.30 is the next big support after the gap fill. So, you know, if it does look like a gap fill and then he wants to keep going down, then 75.30 would be the short target. But to me, it's not worth it.
Negative supply shock. And we've seen plenty of tariffs. Obviously, we have the Supreme Court decision that they bring.
Most because a lot of the megs are going up higher. So Apple's green, Google's good, Amazon's good, Microsoft's good, Meta's good. I don't see those get aligned together in one direction in a long time. And we finally get to see that, and the price is going down mostly because SMH is so heavy into the sector now because it's such a huge allocation. So If you look at SMH, this is basically the SMH block for the exception of Apple. This is the SMH block right here, right? So if this block is red, it has a lot of weight on the index, right? So this is also SMH right here. These are the well, this is per SMH, AMAT, and I forgot what this is called. This is a semiconductor producer. I forgot what was the name.
Aided by states social media with respect to interest rates. At least so far, you seem to have escaped that fate. But I do think it's important that we have an understanding of whether or not the president is trying to influence Fed conduct. I know you were asked recently at your last press conference.
All right, I think I'll call it a day here since
I think your response
we pretty well hit like pretty close to gap fill target. 75.50 is what we were aiming for this morning, and we hit it. We also hit the upper target of 75.75. So I call that mission accomplished for the day. I'll see you guys in the chat room. But I think I'm done trading today unless we're going to get that reversal back up.
Answer. You or have you not had communications with President Trump since you